All right, let's talk about the stock market today.
Your forecast was for the S&P 500 to fall to 4450 by year end. Is that your base case scenario? Is that your worst case scenario? Are you changing that up in any way?
It's my base case scenario, and I'm not changing that target because much of what's transpired over the last few months was very much in line with my expectations. 4450 is actually not that dire. To get to 4450, all the S&P 500 needs.
4450 is a big drop, right? Right now it is what? 5,000, so 4450, yeah, that's not a big, huge drop. But considering it went down 6% today, and considering it went down like 10% in 2 days, right? Another 500 points, whatever, right?
Needs to do is trade down to a forward P multiple of 18 and for earnings estimates to decline by around 10 percentage points. 18 PE is not that low. The average P ratio between 2015 and 2019, a period which didn't include a recession, a period which encompassed most of Trump's first term, the average P ratio back then was 16.8. I'm talking about 18. Likewise, a 10% drop in earnings estimates, a typical recession is closer to 20%. So if anything, I might be too bullish by having this very out of consensus price target.
Do you think that we're going to get there at the end of this earnings season, or at least get en route to that when it comes to those earnings estimates, given that companies don't have a lot of visibility and are going to want to play it safe when they give their forecasts?
I think this sell-off has sort of unfolded in three stages. The first part of the sell-off was largely driven by the Mag 7 stocks. In fact, up until so-called Liberation Day, the other 493 companies were up slightly for the day. Now that, of course, is changing now because of the prospect of a trade war, but we still haven't priced in a recession. That'll be the third shoe to drop.
We'll do a separate video on the Mag 7 here. Stay tuned.
Once we price in a recession, the S&P, I think, is going well below 5,000.
Okay, so that's quite a statement there, that we still haven't priced in a recession. Is the U.S. more vulnerable to recession now because the economy had been holding up so well up until very recently? You talk about this negative feedback loop that you see kind of unfolding where people are worried about their jobs, so therefore they spend less. If they spend less, companies make less money, and then they pull back on hiring, and then it just kind of goes in a big circle.
I mean, the economy wasn't holding up that well. Like if you look at wage and salary income in real terms, it was only up 1% in February year over year. Now, of course, if you look at the CPI swap market, it's pricing in inflation getting up to 3.5% in 12 months. So that's a more than a 1 percentage point increase in inflation. If you got real income growth of 1% and you're going to get this additional inflation, that's negative income growth later this year. And households don't have the ability to borrow. Delinquency rates on credit cards, auto loans are back to where they were in 2011, a year in which the unemployment rate was 8%. We're at 4.2% now. They've run out of those pandemic savings, which at one point totaled over $2 trillion. So income growth is going to slow, spending growth is going to slow, and we're going to end up in a recession. When? It's not clear. My best bet is that the recession.
Well, so this dude is predicting a recession. It's not a matter of if, it's a matter of when.
Will start probably in the second quarter of this year, so it's imminent.
It's imminent. How are you?
It's imminent.
Thinking about the tax cuts that Republicans are determined to pass this year, because the Trump administration has made clear that they're willing to endure some short-term pain, but they see things recovery by the second half of this year, in part because of the other policies that they're going to deploy.
Well, these tax cuts will just extend the existing tax rates. And of course, now there's actually some talk about maybe not extending the tax cuts for the very high income groups. So we're not going to get a lot of new tax cuts, like maybe no taxes on tips and some minor stuff like that. But it's going to be offset by spending cuts that DOGE is orchestrating. So fiscal policy is not going to be stimulative. Monetary policy is not going to be stimulative because the Fed is concerned about inflation. And so the usual policy response that would get to economic downturns monetary easing, fiscal easing, is going to be absent this time, and that's going to deepen and lengthen the recession.
Well, this guy's pretty negative.
Peter, one thing that strikes me, of course, is that you are based in Montreal, giving you some physical and cultural distance from the groupthink that takes place in New York or Washington. What do you observe that others in the U.S. have yet to notice, let alone digest and price in?
It's funny. I think up until maybe a day or two ago, the consensus was still that Trump is just using these tariffs as a negotiating ploy, that he's not really serious about tariffs. This despite the fact that for 3 decades, he talked about how he loves tariffs, how he wants to erect this protectionist wall around the U.S. I don't know where that groupthink came from, but it turned out to be pretty clearly wrong.
So this guy's obviously pretty negative. The worst is yet to come. The recession is coming. Doom and gloom. Now, for day traders and stuff like that, that might be bad news. But for long-term investors, maybe. What do you think? This is an opportunity to buy, or buy and hold, or just hold what you got, build up some cash. Leave me comments below on what you guys think. Okay. If you need to start investing and you see a good opportunity, hit up the Robinhood link in the description below. It's a very easy platform. I use it myself, and we both get free stocks if you do. All right, leave me a comment below. Thanks a lot for watching. Subscribe to the channel if you want to see more of this. We'll be talking about the Mag 7 decline, so make sure you subscribe and that you watch one of these next videos, and I'll see you there. Peace.